Plug Power, NASDAQ Plug, is a green energy hydrogen power and battery energy storage company whose stock has been out of control. Plug stock is up about 40% year to date and 1,300% in the past year. The stock is simply overvalued, even at its present price. Today, we'll tell you why Plug Power stock will explode to the moon. Number 8. What happened to Plug Power stock? Plug Power shareholders cannot catch a break. In late February, the fuel cell company admitted that despite its reporting quarter after quarter of increases in gross billings, its revenues actually went negative last quarter. Fast forward 1 week, and the company announced it would delay filing its 10K annual report with the SEC because it needed additional time to complete the procedures related to its year-end reporting process. 2 weeks later, the company announced that it would have to restate about 4 years' worth of financial statements to correct errors in accounting. In total, Plug Power stock has lost 25% of its market capitalization since the bad news started rolling in, including a 3.9% drop through EDT. Analysts are split on how investors should react to Plug's big drop. Yesterday, investment bank Trust withdrew its buy rating on Plug stock, and Craig-Hallum cut its price target nearly in half. But Cowen, B. Riley, and Roth Capital all called the sell-off a buying opportunity, reports thefly.com, with B. Riley calling the restatement accounting noise and Cowen insisting it's not a nefarious event. Today, a fourth analyst, Canaccord Genuity this time, made the buy opportunity argument, insisting that Plug seems to be just switching around classifications of assets on its balance sheet, and that the earnings restatement won't really affect the company's business or prospects. There's never such a thing as just one cockroach, right? Once investors get wind of one financial shenanigan at the company, it's often the case that additional shenanigans come to light as investigators dig deeper. Number 7. Plug Power's fundamentals remain robust. Plug Power stock has plunged about 25% over the past 5 days. Ostensibly, you'd think that the company reported miserable earnings or lost a big deal. You'd assume that the company's fundamentals are rapidly and significantly deteriorating. They aren't at all. The world is still pivoting rapidly towards clean energy adoption, propelled by supportive legislation, shifting consumer demand, falling cost, and improving technology. Hydrogen fuel cells are gaining significant traction in certain clean energy end markets. This includes long-haul transit and heavy usage materials handling, where the benefits of density, range, and power output compared to plug-in batteries shine bright. Above all else, Plug Power is still leveraging its early technology leadership in making HFCs. This allows Plug to establish an expansive partnership network spanning across the entire hydrogen economy, including autos with Renault, stationary with SK Group, and materials handling with Walmart. This means Plug is still the unrivaled leader in the booming hydrogen economy. Ultimately, once this ephemeral rising rates headwind reverses course, Plug stock will rebound in a big way. Number 6. Plug Power stock is now undervalued. The recent sell-off in Plug has plunged shares into unvalued territory. Here's the back-of-the-envelope math. The hydrogen economy is expected to grow revenues at a 10% annualized pace into 2030. Plug Power will continue to rapidly expand share in the market as the company replicates its dominance in the materials handling market in ancillary markets like stationary and autos. The company will likely sustain 20% plus revenue growth over the next decade. Profit margins will improve with scale since HFC manufacturing costs will fall as production ramps up. This will lead to significant profit margin expansion and likely turn 20% plus revenue growth into 40% profit growth. Net My numbers say that Plug Power will grow earnings towards $6 per share by 2030, based on a 20-time forward earnings multiple and an 8% annual discount rate. That implies 2021 price target of nearly $65. Perhaps not coincidentally, Plug Power just sold a bunch of stock at $65 per share recently. Plug Power is a long-term winner. Recent weakness is a growth overreaction to the ephemeral rising rates headwind. This headwind will reverse course soon. Once it does, the sell-off will end. Plug stock will bottom and rush back to all-time highs. Number 5. The massive push for green energy. The Biden administration, as well as most of the government across Europe and parts of Asia, is engaging in a coordinated effort towards green energy. With this groundswell of enthusiasm and funding, almost any project with even a glimmer of hope will get funded and green-lighted. Beyond government funding and subsidies, the stock market is trading anything green energy at astronomical multiples, allowing related companies to raise plenty of cheap capital. That is the short term. In the long term, the massive array of green energy solutions will be weeded down to the ideas that work efficiently and cost effectively. Hydrogen will likely play a role in the future of energy production and consumption, but how big that role is will depend on the viability. Plug is going at it with an all-hands-on-deck approach. They're using their strong fuel cell technology to go at the future of energy from every conceivable hydrogen-related angle. Some of their business lines will turn out great and others will be a swing and a miss. Plug laid out a significant growth goal of $1.2 billion in annual sales by 2024 in what it's called its 2024 vision. In January of 2021, this vision was upgraded to $1.7 billion in annual sales by 2024. Number 4. Plug Power is rising for fourth straight session. In general, green energy stocks are in favor amid the thrust to move away from non-renewable, pollution-causing fossil fuels. The change of guard at the White House, which is pro-green energy, only added to the enthusiasm. In company-specific news, Plug Power is planning to build a green hydrogen plant in New York's Genesee County, Buffalo News reported. The plant will supply a freight transportation and materials handling equipment, the report said. Construction is set to start in March and is expected to be completed by December 2022. The report also said the Western New York Power Proceeds Allocation Board has recommended awarding $1.5 million to support Plug Power's project. Some of the buoyancy in the stock may also have something to do with Bernstein initiating coverage of Plug Power shares with an outperform rating and $75 price target. Wall Street analysts on average have a strong buy rating on Plug Power shares. The average 12 months price target for the share is $65.65, which incidentally suggests downside from current levels. Number 3, putting together the 2024 vision. Two of Plug's business segments are realistic and practical solutions which legitimately could live up to the lofty ambitions. The hydrogen plants and fuel cell vehicles seem a bit far-fetched to me, and I don't see a road of profitability in that area. In the near term, steam methane reformation absolutely clobbers electrolysis for hydrogen production with a cost that is less than half that of PEM electrolysis. With this major segment falling short, I suspect Plug will struggle to meet the 50% CAGR required to reach its 2024 vision target. There's nothing wrong with shooting for the sun and landing on the moon, so I don't mind the high level of ambition. That said, the valuation is quite stretched. Plug's business is fascinating, and I hope the company does really well, but please understand the risk of investing in this sort of bubble. Even if fundamentals work in the company's favor, it could drop as much as 90%. An EV to 3 years in the future, EBITDA of 8.7 times would be far more realistic. At this price point, it is more gambling than investing. Number 2. 3 big reasons why the month-long dip in Plug Power stock. The rising rates fear that is spooking the stock market, and specifically growth stocks like Plug Power, is completely overblown. It will pass soon and without inflicting much more damage. Plug stock is fundamentally undervalued at $50 relative to the company's long-term earnings growth potential in the various verticals of the multi-trillion-dollar hydrogen economy. The technical underlying Plug stock imply that shares have bottomed and are in the processing of reversing course back into long-term healthy uptrend. Long story short, near-term dips in long-term winners are almost always buying opportunities. This is no different. You have a near-term dip in a long-term winner with signs that the worst of the near-term dip is over. That means it's time to buy Plug stock. Number 1. Plug Power stock in 2021. For over a year now, one of my favorite growth stocks to buy and hold to generate exponential long-term wealth has been hydrogen fuel cell maker Plug Power, NASDAQ PLUG Plug. The President Joe Biden administration is possibly looking to increase incentives for electric vehicles. That could act as a catalyst for Plug stock. It might mean some of the money will spill over to hydrogen power electric vehicles as well. Now, Plug is a great stock to buy, but it's not my favorite stock to buy. Instead, my favorite stock pick is one I believe could turn into the next Amazon. Despite all the negative numbers, Plug insists it plans to accelerate expansion in the green hydrogen generation business in 2021, and it will continue to expand via partnerships, joint ventures, and acquisitions in the hydrogen ecosystem. The company is looking to grow gross billings, again not revenue, to $475 million in 2021, then grow that number again in 2022 to $750 million. There's no word on what that will work out to in revenue, however, and no word on how much money Plug might lose. Don't overthink this one. Plug Power is still the king of soon-to-be huge hydrogen economy. Do share with us in the comment what are your thoughts about this stock. Please subscribe to the Stock Advisor. Thanks for watching.